Good afternoon, this is Mike Bertelsen, the Bear Market Investor. The market update for Tuesday, September 20, 2011. We're here looking at the S&P 500 stock index in the daily time frame. We're also going to be looking at the 15-minute time frame after that. First, let's have a look at our daily chart. I want to refamiliarize you with this particular chart because I'm going to just briefly discuss it so that we can move into the 15-minute time frame if you're not familiar with my wave analysis in prior videos. I do recommend, by the way, that if you're not or have not seen any of my prior videos, please do review some of them, particularly some of them that discussed the volatility index and such, and my long-term wave analysis and trending on the S&P 500 stock index. Now, from the March 2009 lows, we had what I believe is a bear market rally concluding from an Elliott wave perspective at this particular point right here. As I've noted in prior videos, many Elliottians and analysts have placed that at the actual price peak of the counter trend rally. I don't believe that that's the correct analysis. I'm placing that here. I've explained why in prior videos. Now, this suggests, again, based on my analysis, that we are resuming the larger bear market and will continue down, probably to take out that March 2009 low, proceeding on lower than that. And this will take a number of years to resolve, probably between late 2014 and 2016, somewhere in there, before we start seeing the markets begin to bottom out. We're just going to have to look at, cyclical analysis isn't precise in terms of time. There's a little bit of give and take there, and when there's counteracting cycles, you can have something bottom out before you think it should or after you think it should, and that's just the way it goes. Hopefully when we get further into this bear market here, we'll be able to take a look at some of our other indexes, such as the volatility index and such, to try to figure out where that might actually bottom out and when the appropriate time to go long in the market would be. I'm the bear market investor here, but I'm only the bear market investor so long as we're in a bear market. So I do believe, again, that we're likely to conclude that in the next several years here, but again, we're just going to have to wait and see how this wave structure unfolds. From the peak there, we had a wave 1 down, wave 2 up, wave 3 down. We entered into a complex correction, which I believe is still best counted as a double zigzag or bear flag formation. Now, we have not yet broken down from that formation yet. We did fracture the overall trend line, the bottom of this support channel right here, but we have not yet moved on through that. Now, right here, as you can see, this looks like a 3-wave structure suggesting a counter trend. However, as we'll see in just a moment, I think this could best be counted as a expanded flat second wave, suggesting that we have 3 waves up, 3 waves down, and then 5 waves up. The 5 waves up here is pretty clear. Now, the complex part of this is that if, of course, we actually did have 3 waves down and we are still in a 4th wave right here, and that we have not yet begun the 5th wave down, we would expect the 3 waves right here, and we would potentially expect 5 waves up, followed by a 3-wave decline, and then another 5 waves up. So the market has some options right now, and I can't rule anything out. We're just going to have to wait and see. But so far as I can tell, we have not completed the 5 waves down yet that we're expecting before that larger counter trend rally erupts. However, I can't necessarily rule that out either. I think that it's more likely, based on all of my indicators here, particularly in the RSI, that we actually did conclude our 3rd wave in and around this point right here. So again, we'll just see how the wave structure unfolds after this. Certainly, if this did turn out to be the first 5 waves down, then we should see evidence of that in the wave structure as we begin to decline. So let's go and have a look at our 15-minute time frame. Okay, we're looking at the 15-minute time frame of the S&P 500 stock index. Now, let me talk about the 2 probable counts that I have an eye on at the moment. Now, the first would, of course, have us terminating the wave 4 double zigzag at this point right here. From there, we had a 5-wave decline, what appears to be a 3-wave rally, and I talked about this in the prior video. Some folks were counting this as 5-wave. I thought it was probably a 3-wave. And then we began descending, and I can't remember exactly where I created the last video. I think it was during this descent, or maybe I posted a comment about the decline here. But in any case, this is a little bit of a question mark. If I were to read this as a 5-wave decline, then that would suggest that, in fact, we probably are still in our 4th wave. In that we'd have 5 down, 3 up, 5 down, creating a 3-wave connector for yet another potential zigzag or some other formation. You know, some other 3 of some sort, or, you know, what have you. Now, assuming this is potentially an expanded flat, and that this would count as 3 up, 3 down, then we would have 5 up. Now, right now, it looks like we could have concluded that 5 up, if that's the case. So, that would read something like this. Wave 1 up, wave 2 down, potentially right here. Wave 1 of 3, 2 of 3, 3 of 3, 4 of 3, or 4 of 3, 5 of 3. We had a 3-wave decline right here in a 4th wave. And, you know, structurally this makes a lot of sense, because if you look at the decline that we had right here, this was a very minimal 2nd wave. So we were expecting a more maximal 4th wave right there. And from there we had wave 1 of 5, 2 of 5, 3 of 5, I believe, 4 of 5, and then 5 of 5. So that's how I'm reading it right now. There are other possibilities. We may have actually just peaked out right here in the top of the 3 of 5, as we have not yet moved in or beyond this price peak right here, which would suggest, of course, that we did in fact terminate that. So we could still rally up a little bit. But the key is that if we were to move beyond this peak right here, then that tells us that it has to still be working on the 4th wave. Unless, of course, we're in, you know, some other wave formation or wave structure, like we already had 5 down and we're in a larger 2nd wave up. I don't think that's the correct count. I think it's likely, of course, that we're still working on the larger 5 down. So, this being the key right here, we can move a little bit higher, not much, but we can move a little bit higher without invalidating the whole, you know, 5th wave beginning yet, but not much higher. You know, as you can see right here, this being the peak, there's not a whole lot of tolerance for further upside. But I think in terms of a expanded flat correction, and the way that I'm trending this here, seeing this break down from that gives me a little bit of belief that we're probably beginning to break down from this expanded flat correction. Now, again, there's no confirmation of any of this yet, so you know, bear that in mind. But you know, we'll see some sort of confirmation one way or another. Either we're still in the 4th wave, or we are really in this 2nd of 5th wave, and that's just about to conclude here. Now, with such a deep retracement, again, in a 2nd wave, if that is the case, the 2nd of 5th, we are probably going to see a pretty drastic sell-off in a 3rd of 5th wave. So let's wait and see what happens here. But you know, certainly this scenario that I'm talking about of being in this 2nd of 5th wave fits right now. again, what would invalidate is moving beyond this point right here. Just from an Elliott wave rules perspective, you can never have a second wave move beyond the beginning of the first wave. Okay, that's a rules violation. It can't happen. So in the event that we do move beyond that point, it tells us that, of course, we're not really finished with the fourth wave yet under the current Elliott count. So let's wait and see what happens over the course of the next couple days. I assume if we are not yet finished with this expanded flat correction, that's in fact what we are in for a second of fifth wave. That's probably just about to conclude. So I don't think we'll have to wait much longer regardless. And being so close to this peak right here, either we're in wave 4 and we'll know that pretty soon, or we've already terminated wave 2 of 5. Let's just wait and see what happens. Have a great night. If you don't mind, please do leave a comment. I really, really appreciate it when you guys do that, when you leave comments or give me a thumbs up or something like that, because it shows me that you're interested, and I do read all of those, and I really do appreciate it when you guys take the time to do that and show me that you are watching, that you do appreciate what I'm bringing to you, of course, for free. And it motivates me to continue doing so. Have a great night. I will speak to you guys soon.